Hey, good morning, everyone. It's Matt Donahue with your weekly market update for the week of July 27th. Let's jump into it. We're going to talk about tariffs this week. Over the past year, it really seems like there was one headline after another about tariffs. They're going to be higher, they're going to be lower. There's court battles. Now there's a new trade policy. And it's been enough to make anyone, kind of wonder what it all means for the economy and for their investments. So the good news is the picture is starting to become a little more clear. At one point last year, the average tariff on imported goods was running at about 18%. Now, that number has dropped to about 10% since the Supreme Court ruled that the administration may have overstepped itself. And some new tariffs are expected, but overall, the pressure has eased considerably. Think of it this way. A year ago, investors were preparing for a hurricane, a category 4 hurricane, maybe. But today, while we're still dealing with some storm clouds, the overall outlook, the forecast, looks a lot more manageable. So, why does this matter? Tariffs are essentially a tax on imported goods. So, when a business pays those taxes, they usually have two choices. One is to either absorb the cost, two is to pass it on to the consumer. So, what do most companies actually do? Well, so far, most companies actually absorb the cost. That's helped keep inflation down, well, kept it from rising as fast as many economists may have feared. Even better, the government recently refunded about $50 billion in previously collected tariffs, which provided some relief for some of those businesses. So you're an investor. What should you do? It's an important reminder that markets react not only to today's news, but to changing expectations. Last year, a lot of people were worried that tariffs would become a lot more damaging than they ultimately were. That doesn't mean the issue's gone. It just means that the risk is a little less than it was a year ago. And as investors, we can't build financial plans around headlines. We build them around long term goals. And that's why things like diversification, patience, and discipline continue to matter much more than trying to predict every policy announcement coming out of Washington. So that brings me to our thought of the week. This comes from our friend Marcus Aurelius. You have power over your mind, but not outside events. Realize this, and you will find strength. Hey, I don't control tariffs, neither do you. We don't control inflation. We can't control interest rates or market volatility, but we can control how we choose to respond. We can save consistently. We can diversify. We can review our financial plan, and we can avoid making emotional decisions based on temporary headlines. And that's where your long term success lives. That's where it's built. So, if you'd like to discuss how today's economic environment fits into your retirement plan, your investment strategy, or overall financial plan, we're here. We're happy to help. Schedule time with me, Ken, or Jason, and let's make sure your plan is focused on what matters most, not just this week's headlines. Thanks for watching, and we will see you next week. Have a great week, everyone.